Signals play a crucial role in binary options trading by providing traders with actionable insights and recommendations based on market analysis. These signals are generated through various methods, including technical analysis, algorithmic models, and professional trader expertise. They typically indicate the optimal times to enter or exit trades, specific assets to trade, and the predicted direction of price movement. By relying on signals, traders can make informed decisions without needing to conduct extensive market research themselves, saving time and effort. This is particularly beneficial for beginners who may lack the experience to analyze market conditions effectively. Signals can enhance trading accuracy by filtering out noise and focusing on high-probability trading opportunities. Additionally, they help in maintaining discipline, as traders can follow predefined strategies rather than making impulsive decisions based on emotions. Various signal services offer different delivery methods, such as email, SMS, or mobile apps, ensuring traders receive timely updates. However, the effectiveness of signals largely depends on the provider's credibility and the trader's ability to use them judiciously. Combining signal use with personal analysis and robust risk management practices can significantly boost trading success and profitability in binary options trading, making signals an invaluable tool in a trader's arsenal.